closing beat, everybody. Happy Monday. How we doing today? Hope you're having a good day so far. Good start to the week. We're financial advisors here at Jazz Wealth. We cover the stock markets every day for our customers here, but also for you guys that may have questions along the way. And I'm happy to answer those questions at the end here as we go through this. Just a quick show that we do. And in exchange, if you happen to be working with a financial advisor or working with someone, or maybe not getting the help that you think you need, maybe you'll keep us in mind at jazzwealth.com. We work with all investors, no matter what size you are, just getting started or very near retirement. Happy to help you. So here we go. Let's get started. The week starts off with the markets a bit mixed, as you could tell by our, well, can't see it that way. Got the green light and we got the red light. Just kind of goofing around with the lights today. So a little bit mixed. Now, on the right-hand side of your screen, you can see the Dow was down by about 80 points. You got 3 points on the S&P to the positive and 15 for the Nasdaq. A little bit of a disconnect there, and I always say whenever you notice that disconnect, you want to kind of see why. There's got to be something going on there. And in this case, what we talk about is when the Dow has a gain of, say, 100 points, or like this case, a loss of 83 points, if it really were a broad-based sell-off in the markets, remember the Dow is only 30 stocks, so if it really was a broad-based sell-off in the markets, you'd see the S&P down about 7 or 8 points as well. There's that correlation, right? So if we're down 100 points, you'd be down about 10 in the S&P 500. So today was a way for us, again, to tell there's some disconnect there. It could just be one stock. It could be a couple names. We've got earnings season coming up, and that tends to sort of stretch the markets out and create a little bit of a mixed bag, or jello slushing on a plate, as we like to say. So we'll cover that here as well today. The chart on the bottom right that you're looking at there, that shows minute by minute what the S&P 500 did today. Every one of those little blips represents 5 minutes, and you can see we started off weak, and then the buyers came in and said, not yet, market's not pulling back just yet, not interested. The S&P closed just positive on the day by a couple points, so looking good there. This rally continues. I think it's 8 days now that we've been sort of just trending higher there. Let's move over to the charts. By the way, if you're a customer, you go into the dojo, this is where we're getting this information. When you log in, all of our customers get access to this. You're going to notice something new. Off to the right, we've sorted the list of sector ETFs that we put in there. We've sorted them by percent change on the day, and it should just auto sort for you. You can also change it if you want to see the negative ones down first, if you like looking at that sort of thing, or if you just want to see the ones that are positive ranked all the way to negative. We've now sorted them in there and then cleaned up the charts just a little bit to make them look a little bit better, really for my liking, not really anything else. So be sure to check that out. Great updates there and lots more coming to the dojo. It's not just a video library anymore. We're expanding on that for sure. Well, you see the S&P 500 on the screen there. You could see the string of positive days here, a nice run headed back to highs. Right, we still have a little bit of room left to go. If I back out here and we look back to last year, about September, here's these prior highs, getting very, very close. I believe about 1.5% to 2% left to go. We're hinting at knocking at those doors. I do have a few concerns if you're following along. Volatility perked up a little bit today. That's something that you don't normally see. I'm looking at the ETF here, but if you follow the VIX futures, they sort of gave us a little uptick, about 2%. It's up at the top there on the top right-hand side of the little scroller. So not good. You usually don't see that. We're going into earnings season, so that's going to be a big focus. And it was a bit of a mixed bag overseas. So just depending on how you like to look at the markets overseas. I also put that up at the top there as well, so you could check that out. You got China moving a little bit lower on the day. I believe you had France moving a little bit lower as well. So not really a strong, consistent start to the week. Not a big deal there. The big deal is going to be earnings. So if you're following along, up at the top here, you can see the different markets and their performance today. The Russell was a little bit lower on the day as well. Not a big deal. Continues to fight through that resistance. But earnings, that's going to be the big focus coming up here. It is widely expected, by the way, that earnings will decline by just over 4%. I think it was 4.3 or 4.2% for the quarter. Not good. Now, we've already priced that in. We're already expecting that. And here's where you could see the real rocket ship if the markets take off here. Every earnings season, I try to tell you, what's everybody focused on? What do we care if they beat on earnings, revenue, buy back more shares? What's the focus this go around? There's going to be two things that I want you to look at. We need beats on earnings. Remember, the bar has been lowered for a lot of these companies, so they don't have to beat expectations by all that much. They're now adjusted expectations. But also, you want to see companies guiding forward. The real juice of any market move or individual stock move for this earnings season coming up is going to be if the company says, yeah, we beat on earnings, it was okay, but going forward, we're positive. We think things look better. We think we'll do better than what Wall Street expects. So that's going to be the real focus this earnings season. And wouldn't you know it, we're definitely going to cover it over here. So you don't have to worry about remembering that. I will remind you for sure. All right, let's take a look here at the individual sectors. USO, that's an ETF to track the price of oil. You could use oil futures if you like, but you see the strength in oil continues. You got another 2% gain on the day today. OPEC continuing with their cuts. Everybody scaling back on the oil production. Remember, oil's in what's called backwardation, which means that it's you get a credit for extending duration if you're playing in the oil futures markets. That's largely seen as an opportunity for suppliers to fill the market with oil. So a lot of people think this could be reaching sort of the end in the short term for a move in oil. I'll add to it. If we back up, can I do it in 1 year? Yeah, look at this. If we go back over here, we're hitting price resistance almost perfectly to the T. So if you're a technical trader and you like looking for that resistance, we're there. We hit it today, and oil actually backed off of that resistance intraday. So you could see people already starting to assume that resistance is going to be tough. Add into that the backwardation concept there and what they're having to deal with, and you end up with maybe some overhead challenges for the price of oil. It's up over 40% just this year, by the way, the price of oil. 6% just this month so far. And what is it? It's April 8th. So give you an idea how strong oil's been if you haven't really checked in or paid attention for a while. Tech I thought was kind of interesting today. It did get back to those highs. Sort of hesitant. If you were following along throughout the day, it was sort of hesitant there. It didn't seem like it just wanted to get going. Early weakness, and then it was bought up towards the end of the day. A lot of relative strength here. So the individual names in the tech space that fall into the tech space, a lot of relative strength, and that continues. So those big names that you keep seeing, the Microsoft, the Salesforce.com, all still kind of trying to hold their own when you compare it day by day as far as strength when the markets are weak and so on. On the downside, you had Aerospace. We put that one in there. There we go. By the way, if you're one of our customers, you want me to add a symbol in here, or you have something you think I've missed out on, I'm happy to add stuff for you. But we have loss of over 1% aerospace and defense. A lot of that's going to come from Boeing. Boeing was the reason the markets were held back today. And Boeing, they announced on Friday, we didn't do the Dow show, but Boeing announced on Friday that they were cutting production of the 737 MAX all the way back to 2014 levels. That's 42 planes a month. I believe they were doing 57 prior to the crash or just recently. So they're backing down to 42 planes per month. That also caused a downgrade from Bank of America. Bank of America says that because of this sort of scale back in production, that now anyone that wants that's in line to get one is going to have to wait an additional 6 to 9 months to get their plane. Really a bit of a conundrum here because, well, I mean, if you make airplanes for a living, it's kind of a good time for you, right? Because there's a lot of business out there, and there's really only two places to go. You got Airbus, you got Boeing, so really a lot of room. By the way, in China, there's actually an airplane manufacturer over there that's looking to eat Boeing and Airbus for lunch. They are spending tons of money to build their own airplanes and, of course, compete with the U.S. and everything. So I think we're still a couple years away from that, but you keep seeing those rumblings that they're ready to go. They're starting, they're producing, they're working on their test planes and everything. I don't know. We'll see what happens there. Boeing losing about 4.5%. Morgan Stanley, a little bit lower to start the day. It did finish higher. The financials got a broad-based rally there. Morgan Stanley helped Lyft, right? They're a market maker with Lyft. They took them public. They helped take them public. And Lyft is essentially saying, hey, wait a minute. You've been short selling our stock and marketing to others that they should short sell and, of course, executing those orders to short sell. Morgan Stanley's not doing anything wrong, by the way. If you know anything about market makers and how they take issues to the market and how they support the stock on opening day, and I believe the first 90 days or so being a real market maker as far as increased efforts, you know they're not doing anything wrong. Their opinion, what they tell their customers, what they need to do to satisfy order flow, who cares, right? So what? Lyft is looking to pick on somebody because they had a rough go of it. Their stock was down about 5.5% today, and I think that's because a lot of investors look at that, the big institutional investors and analysts, they look at that and they go, come on, guys, you're distracting from what's really going on here. Your stock is suffering. You have some real issues. Maybe you overpriced, and maybe some people convinced you to do that. But Morgan Stanley, in my opinion, has done nothing wrong with the accusations that Lyft has made against them. Very, very common. And it's distracting, by the way. Okay, Wells Fargo, let's zoom out here just a little bit. You got Wells Fargo basically flat on the day, was lower, and then kind of crept back with a broad-based rally. Warren Buffett, he's the largest shareholder. Yeah, he's the largest shareholder in Wells Fargo, and he basically made a off-the-cuff kind of comment that said, hey, the new CEO, or the CEO that's just resigned, rightfully so, maybe you guys should look outside of Wall Street for a new CEO. Don't go picking the traditional Wall Street guys and bumping somebody up through the ranks. Maybe we should look outside and try to find somebody to put a fresh face on things, even though they may not be as sort of comfortable with the space. So that's the reason for any change in Wells Fargo today. We'll take a look at Snapchat. Is it hot in here? It's really hot in here. I think these more lights on or something. Snapchat up 3.5% today and has been doing well. Basically, they were upgraded because of their improvements in Android and also usage on the Android side. The analysts said that they were gaining traction on that side and that this is a real inflection point for maybe the midterm here, 12 to 18 months for Snapchat, so stock was upgraded there. GE was one of the worst performers of the day, actually, down 5% on the day. JP Morgan basically said, hey, you know when you made fun of us for putting a $6 price target on the stock? We're going to lower it to 5. So they continue to beat up on General Electric. And I saved the quote. They said, we believe many investors are underestimating, you guys, are underestimating the severity of the challenges and underlying risks at GE while overestimating the value of all the small positives along the way. To translate, that means that everybody is buying the dip because they're assuming the worst is behind General Electric, and in reality, all of these moves, these gap hires, are based on small, almost inconsequential events that the company's been taking to restructure themselves and try to grow and fix all the problems there. So they're basically saying, hey, not so fast on General Electric. A couple others, really pretty slow news day. Wynn Resorts up about 3% on the day. They were upgraded to buy at Jefferies, all because of China, Macau over there. Things are really starting to look a lot better compared to where they were about 4 years ago. I mean, everybody was doing great, and for some reason they were really suffering over there. The Chinese are officially gambling, spending their money, and so things are looking better there. There's actually expansion. Las Vegas Sands is expanding over there and spending a lot more money, taking on a lot more debt, by the way, to get that done. What else? Do we got one more for you? Nah, let's look at Southwest Airlines. Southwest Airlines, ticker symbol LOVE, LUV, down 2.5% today. They were downgraded by Raymond James, a local company here. It wasn't the best downgrade. I'll give them that. Usually there's a downgrade and there's a really detailed, smart, analytical way of looking at the stock, its price, and where they think it's headed. This one was sort of vague. They were kind of just like, look, the grounding of the 737 jets, we think that's just going to continue to be an issue. American Airlines canceling some more flights as well, or extending the dates until those flights are going to be canceled. And so I don't know. I don't think it was the best one there. It did hit the stock by about 2.5% on the day. And, well, that's really all I got for you. The rest of everything else was sort of a mixed bag as far as, up or down just a little bit. Nothing really exciting. Utilities pulled back a little bit. REITs pulled back a little bit. But nothing to really move the needle, cause anything to change or do anything special there. So if you have any questions, I'm happy to answer the questions. Otherwise, we'll wrap it up. Jacob says Delta is overbought in the short term. That's going to be the trade there. In the short term, if you mean over the last couple weeks, I would agree. Very much extended in the short term. If it does move higher, you got about $60, right? $60 price target for the short-term trader if it doesn't pull back. Starts to pull back from here, I think you see people take their profits, but overhead resistance from a technical perspective around $60. Yep. Roku continues, to be a little bit of a roller coaster there. Back and forth over the last couple months. You had companies saying this was the best pick of 2019. That got us to this point. The sideways consolidation there is kind of like people going, all right, let's see some earnings, right? Because it seems like Apple may be ready to eat you guys for lunch there if you don't partner up the right way. Now, it seems like they are, to be honest with you. So a little back and forth in Roku. And Spotify still added 0.8% on the day. There was a report, or was it the Wall Street Journal? that said Apple Music's now taken over Spotify in terms of number of paying users. I don't know. I don't use either. Not a good person for that. We answered your question on GE. I love it. I love it. Yeah, there's a lot of people. There's a lot of underlying buy the dip mentality on Boeing. Hey, I don't know that this is the price to buy it at, but there's a lot of that sort of, hey, when there's a discount, add to the Boeing. I think there's a lot more news to come on that one. I would feel like there'd be more of a discount there, especially if the markets get weak a little bit. Williams been riding the wave. Oh, man, I love it. I love it. Hey, Charlie, showing off the new list today. Yeah. Oh, Dollar Tree was one of the weaker ones today in the retail space. If you happen to follow along on that one, we haven't talked about it in a while. Dollar Tree's pulling back about 3 1/3% today. There was activist investors that were going to try to go after board seats and try to restructure the company. They essentially announced they were backing off. They weren't going to deal with it and try to fight that. So all the investors that participated in that effort, they're not getting it. Oops. Not going to happen. Sorry. There you go. Sony higher today, 8%. Yeah, I think I saw a question on that one. Yeah, Deca, what do you think about Sony's spike today? You've got, this is, again, staying on the activist investor route. You got activist investors coming into Sony trying to help these guys out. That's a lot of work, to be honest. Like, if you kind of study that company and what they're going through there, they got their hands full. But obviously, investors love when outsiders come in. They've studied the company, analyzed it, and they can sort of shake things up, get things moving faster. So yeah, we'll see. I mean, that's a great bottom there. Technical traders aren't going to try to fight that bottom, at least in the short term. So if you happen to own the stock, that'd be exciting to see that. If you've been waiting to buy the stock, that's exciting to see that. If you've been short the stock, that was probably your call today to cover in the short term. Yep. Yep, so hopefully that answers your question there. Pavan, missed you on Friday. Hope all is fine. Yeah, all is good here. Just took the day off to help some local customers. Time to time, we go around and meet them as well. We stay busy around here. But we're back. We're back. I love it. I miss being around. I'm like tuned in all the time, like wanting to just take the phone and do the show and stuff. Yep. Nice. What do you think about CVS? So a little back and forth here in the news for CVS. They've got a long-term plan in place here. A lot of struggles, and they've pretty much admitted recently that these struggles are more than they had anticipated. I forget how they worded it. I said it the other day when we were talking about it. For something, if you're just like, hey, I'm going to take a shot on this long term, you kind of like the discount here. Like, it's fairly priced. We could argue that, I guess, but it's fairly priced, and you kind of like the idea of maybe getting a little discount. Remember, this is a relatively weak stock. We haven't said that word in a long time. Technical traders, institutional investors, you'll see them start saying that when the markets start to fall. Investors will look, when the markets fall eventually, they look for the stocks that are already relatively weak compared to the market. So CVS is already selling off. The market's going this way, right? So when the markets do sell off, what do you think is going to happen with CVS? It's still going to have a little bit of pressure to the downside. And those investors that have been holding it as a big chunk of their portfolio, when things get weak, they don't want to go tell their customers or their hedge fund customer, whatever it is, they don't want to tell them that they're holding a weak stock. So they'll sell the weak ones out first. In an attempt to basically get rid of the relatively weak stocks and hold on to the strong. So CVS will really start to show itself on the next pullback in the market here. If it doesn't sell off, that's your hint that you are very close to a bottom. Yep. NBEV, I saw that one come up. I don't follow this one. I saw it come up on the scan of some of the better performers today. You got a ton of short covering in here today. Tons of volume there, a lot of short interest in the stock. So I think you're going to have to attribute at least 50% of that to that one today. I hate buying stocks like this when they do this, especially the low price stocks, because as it gets extended, you get people that want to sell and short into that. So you got to be quick with your, if you are long, you got to be quick with the profit taking, in my opinion. Don't try to pick the absolute top. Too difficult. Look at every other time it spiked higher. Look at what happens afterwards. If you're not quick, you end up giving back all those gains and probably a little bit more. Yep. You got it. Have you considered a subscription service for non-customers who want to see the other videos? So, Michael's talking about these videos here in the dojo while you're looking at the charts. You can actually go to the video library. We just did our market update last week, just incredibly in-depth update there. But you can go through and see all the videos that we don't publish publicly on there. The only reason for the moment that we do not do that and have no plans to do that is not because I don't want you guys to have it. Like, I would just publish it publicly if I could. I'm not trying to like make any money off of it, but the only reason we can't do that for the moment is because we have there's a SEC regulation somewhere in the books, all the way in the fine print, that basically says anything that you say specifically, you have to know who you're saying it to. It has to be suitable for the person you're saying it to. And unfortunately, in the dojo, I am hyper specific about what we talk about. This stock picks, or whether it's the stock market update, what we think is going to happen, changes to the portfolios and things. And because it's so specific, we had to put it behind something where only customers can see it, so that we don't get in trouble. So it's not like for lack of wanting to offer it to you. It's just we have a clean record here at Jazz Wealth. I want to keep a clean record. That's my goal. It's not easy to keep a clean record, by the way. If you look up advisors and brokerage firms, there's all kinds of fines that they have to pay. Not that they're bad people. It's just little things that you mess up, and they have to pay for that. I don't want to pay for that. I want to keep paying to get more data, to keep offering more stuff here. So for that reason, that's the long answer to say we just can't. I can't. Now, could I do something that says, like, if you agree to all this fine print, then somehow it'd be acceptable? Maybe. I don't say, I'd have to ask the compliance people, but it's just one of those things. It's like, look, let's just stay out of trouble. You'd gladly pay for the SEC. Yeah, problem is it'd be an ongoing fine. And just for example, look up Fidelity. Great company. Look up Vanguard. All good companies. Look them up on BrokerCheck and just see the fines they have to pay. Hundreds of thousands of dollars a year in fines. All for silly little stuff. Not that they did anything wrong or treated anybody bad, just little things where they go, oh, that's a rule, and you broke that rule, you now have to pay. I used to work for a brokerage firm, and the day where they would get those fines in there, you didn't talk to the boss. You just left him alone. You didn't even invite him out to lunch. You just left him alone because he would be frustrated. They actually save money off to the side. Brokerage firms, TD Ameritrade, all of them, they save money off to the side purely to pay the fines. It's a tough one. I love it. All right, I'm going to wrap it up there. I've got work to do, so I hope you enjoyed the show. If you did, maybe you'll hit the subscribe button. I really appreciate it. If you need help and you have retirement accounts, long-term investment accounts, you're not getting the help, the education, the support, the training, and the advice, well, maybe you'll check us out at Jazz Wealth. And until then, we'll be back tomorrow. Video today, by the way, the FinTips video was how to have $1 million in retirement. Check it out on our channel. I kind of disagree with it, and I made that clear, but at least I gave you data to show you what's the real goal there. So I hope you'll check that out. Enjoy the rest of your day, and we will see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.